Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today, I just want to go over a thought problem that I've been mulling over as I just sit here looking at the Bitcoin dominance and the Bitcoin chart against each other. Just seeing if I could come up with any, original concepts, things that maybe other people aren't really talking about or haven't thought of before. And what I immediately noticed was this inversely proportional relationship that the charts seem to have, which can make sense, even though it might be counterintuitive at first. If you think about it, the more Bitcoin rises, the more likely that people are also going to invest in altcoins. And so that means that the dominance of Bitcoin can decrease significantly as these altcoins flood the market, just riding on the back of Bitcoin's bull run. So this is the price of Bitcoin at the bottom. As the price goes up, you can see the dominance of Bitcoin goes down because Bitcoin creates a safe environment for these other projects to exist in. And so let's say that originally 100% of the market was Bitcoin, and then it dropped down to 50% because now, half of the things out there during this bull run became altcoins because Bitcoin made it so safe for altcoins to exist in the world. Before Bitcoin, nobody could even imagine investing in those kind of altcoins. Bitcoin truly made it safe for them, and that's why Bitcoin's dominance goes down even while Bitcoin's price goes up. But you see that the other, the corollary is also true, which is that if Bitcoin's price goes down, then the world feels a little bit less safe for altcoins, and so Bitcoin's dominance goes up. The proportion of Bitcoin in the market goes up because people have faith primarily in Bitcoin. They don't have faith primarily in altcoins, which a lot of them are kind of scams and a lot of them are very questionable. And even the really interesting ones like Luna have very shaky foundations, right? There's a lot of Ponzi's, there's a lot of creative accounting, there's just a lot of wishful thinking. And whereas Bitcoin is very well established, most of these altcoins are very new. And so if Bitcoin is going down, people will just assume that altcoins are going to go down faster because they have less confidence in them. They're higher risk. And so they're going to flee to Bitcoin. They're not going to flee to, where they find safety in Bitcoin. They're not going to flee to altcoins where they find even more risk while Bitcoin's price is going down, right? And so what you can see is that even though Bitcoin's price goes down, Bitcoin's dominance goes up. And eventually we reach these certain points where Bitcoin just can't get any more dominance because, while, it could have 100% of faith in the beginning, now it can only have 70% of the faith of the market because the other 30% is occupied by really good projects like Ethereum or other certain altcoins which do have confidence because they survived all of this time, or they are just so important that people are unwilling to part ways with them the same way that they're unwilling to part with Bitcoin. And so Bitcoin's dominance can never get back up to 100%. It can only get back up to whatever the maximum, whatever the lowest faith in altcoins is, right? And so as altcoins increase in faith in the market, then Bitcoin's dominance will reach a shallower and shallower and shallower peak over time. But likewise, the money in the market goes into altcoins more and more and more, which means that whereas previously Bitcoin could have a, like 8,000% increase here, right? From here, it only had a 1,000% increase. And then since the summer of 21, to the top, it only had a 100% increase. So you can see there are diminishing returns because people are putting their money more and more and more into altcoins. And one of the ways to clean up this market and get everything reset for the next bull run is to stress test all of the altcoins by having a major bear market. That bear market will shake out all of the bad projects. They're going to go away. The dev teams will scatter and get other jobs. The projects which are unreliable will fail. They won't have any revenue coming in. And so, of course, the slate is wiped clean. We find out once again what the maximum dominance of Bitcoin can be, and then we repeat the process of these type of bull runs, right? So where are we right now? Well, I just propose that we are in this area. I don't think that we're at the bottom, and I think that this double top was a little bit confusing to people. And so I have proposed, those of you who've watched my channel, I've proposed for a long time that this was actually just an overexuberance of the market to have that first top. And also it was the entry of institutions that like more sine wave type patterns, and so they curved the market down, and all that money had to do something, and so it went into a sine wave. Um, all of that money printing from the stimulus era, from when Trump's Federal Reserve was just dumping trillions of dollars into the market, right? A lot of that went into crypto. And of course, governments across the world were doing the same thing. Now, that blow off top, I mean, we didn't have a blow off top like we, have had in the past, but if you took that exuberance of the market and you just stacked it on top of our actual, all-time high, you would see that we would have had a blow off top, which would have approximately been 100 to $120,000, which is pretty in line with where a lot of people were thinking Bitcoin could hypothetically go just by doing the math based on the past. But what they weren't counting on is the stimulus money and how institutions would come in and create sine waves so as not to have blow off tops, because a business doesn't like that type of chaos. They prefer to have reliable curves, in their graphs. And these really spiky, crazy, bluff tops and just crypto winters, it just messes up their accounting, right? So they want to have curved institutional behavior. They don't want to have the blow off top. And so you can see, if you just took the amount of money, geometrically, that existed in that May top or whatever, and then you just add it to our November top, then you can see we had the blow off top at $100 to $120,000. It was just divided into two sections, that's all. And so what can we say? We have different epochs of behavior in Bitcoin where we may have some type of low, right, which then starts to pump up. And we also have, kind of a new bull run starting at some point, which then just dramatically ramps up. And then we have, a blow off top or a peak, let's call it. And then, of course, we have stages of decline. The first stage of decline, there might be huge relief rallies, there might be altcoin seasons, there might be all sorts of things going on with these tremendous, bounces along the way. And then there's a second wave, which is much more boring. And then finally, there's an ultimate capitulation. But this might feel like capitulation here, and this might feel like capitulation here, and then you have a third capitulation, right? And we also have later on a quarterly backfill, which, in this case, it was the COVID dump, but we had it here also. And even in traditional markets, we always have some type of quarterly backfill, which double checks the previous prices. And so even though I haven't marked it off, you have to understand that we probably would have had a dip in there anyway. But for all intents and purposes, we can consider the third stage to be here, and that this is just kind of a temporary check back, right? So I'll ignore that. Then it just becomes the ramp up, and then we have the actual bull run, right? And so obviously you can see where I'm going with this. I'm trying to suggest a timeline for how Bitcoin might behave in the future. And to do that, I can just plot some dates here. It took about 180 days in that second stage. So we've already had our blown off top here with the red line, right? This was just a kind of confusion. And so let me take off that pi cycle top because, again, this was the confusion. Our real blow off top was right here. You just add this to this, and so it corresponds to the red line. This bull run was similar to this structure. And then we had, of course, the first wave already completed. We got to the top of that, as far as we could go, to this one, or sorry, the bottom of it. And then we fell off kind of a cliff. Here we fell off of a cliff. And then it might be another 140 days. Now, we've only been here for about a month in our current area, so I suggest that, this $30,000 price point, it could potentially endure for several more months. We have no idea. We only have one pattern really to go with, where all these altcoins were very alive and thriving. And so, just if we consider dominance versus price action and what we can derive out of this data, I would just suggest, even though we don't have a trend, we can suggest that these type of coincidences, because this is a second instance, so it's only a coincidence, it's not a trend, we don't have really three really, really good models to put together to start even thinking about a trend. But just based on the coincidence of it on a superficial level, we can suggest that there may be up to 140 days, maybe up to 200 days of just sideways, boring action. In other words, trying to kill the market. You understand what this process does? This process basically dries up the altcoins. And you can see Bitcoin's dominance just surging during this stage. So let me go ahead and put on the epochs up here. You can see that during this second stage of the downturn, right, of the bear market, you can see Bitcoin's dominance just skyrockets. That's the altcoins dying. That's what's happening right now. We are in that second stage. So if you want to know where we are in this bear market, I am creating that roadmap for you. I'm showing you the projections, right? But before we get into that, I think I'd like to show you something else that's very interesting about this pattern, which is that it does appear to be putting in a wedge formation. And what can we just hypothesize about wedge formations is that eventually they break to the downside or they break to the upside, or you just get crammed into the corner, right? Those are really your only three options. And so there could be a time in the future where Bitcoin breaks out in dominance, maybe mass adoption across the world, and its dominance just skyrockets as people just pick up Bitcoin all over the world. Alternatively, we could enter into an era of high regulation, competing with nationalized stablecoins like the US digital dollar or the Chinese digital yen. And those things might compete with Bitcoin, and so maybe dominance even breaks to the downside, you know, and the asset could even die potentially, under heavy enough global regulation. Or it could, be adopted and we could be talking about like years down the line, of course, but it could be adopted, and so it could make a comeback after some dip below under heavy regulation or something. I'm not trying to suggest those things are going to happen. I'm just saying that these are the kinds of things you can think about and how this asset can move in its dominance, where maybe Bitcoin gets suppressed politically or economically somehow, um, or maybe it gets adopted, you know. And then alternatively, the thing that you can see is on its natural course, it will just continue to get wedged into a smaller and smaller dominance. And one thing about that dominance is that, as you can see, this major bull run was highly dependent on us coming from a place of huge dominance. And every time the dominance shrinks, the limit on Bitcoin's growth also shrinks. And so eventually, if we stay within this wedge, Bitcoin will not increase in price very much at all. In fact, if you consider that this run from here to here was approximately, you know, let's just say 3,000% from here to here, and then, we look at this one from here to here, it's approximately 500%, 500%, so only 5x versus 30x, right, from just where I've marked off, then that's 1/6, right? And so what would that suggest? If we get wedged at the same rate and we have bull runs at pretty regular intervals, then the next one would only be 1/6 of what this run would be. And if you can imagine what that means, if Bitcoin only rose 500%, that could suggest that Bitcoin is going to increase by 100% or less. In other words, you may only be able to double your money on Bitcoin. And the real problem with this is that that's being measured from basically this stable point of the market, which is pretty equivalent to the second stage. So in other words, on the next Bitcoin bull run, if our second stage price is 30,000, then perhaps the only price that the maximum price that you could possibly get in the next bull run might be $60,000, which is less than our all-time high during this cycle. And people may say that's impossible. Okay, well, it is possible, and it would be confluent with having a double top. A double top typically means that a market is turning to the downside, and in technology, it can be quite traumatic. And so, if you want to think about Bitcoin as a long-term asset under this wedge that it's forcing itself in the context of the entire market, then you may have to consider that Bitcoin may only double its price, if that, because it could be 1/6. It might not be 1/5. It might be 1/6. And if this was a 500% run, then the next one might be less than 100%. Do you see what I'm saying? So, why would money flee this market? Why would we have a double top? Why would we have a bear market? Why wouldn't we be having mass adoption? Because these guys are going to wait for better prices, and that might suggest that we also have a bear market that's much deeper than you can imagine, because people will want to wait, institutions will want to wait until they can get the best price before mass adopting. And if the upside is only 100%, it's just not worth it. It could just not be worth it under the current risk of the global economy. I hope you see that bigger picture. Now, we can suggest that because we're getting to the end of this wedge, it does seem that within a couple years it would just reach an apex. And typically wedges break out around 70% of the wedge, which we are clearly in that area. It could suggest that if the world is going to have mass adoption, this breakout of this wedge could come in the next couple years, and perhaps the next bull cycle is the one that just reinstates the exponential growth of Bitcoin, and that would require mass adoption globally. And the reason for that is if we consider the market over here, right, which at the this blow off top in 2017, the entire market cap for all crypto combined was only around 600 billion dollars. It was less than 1 trillion for sure. It was about 1/2 of a trillion, okay? At this top of the market that we had in 2021, I believe it was something like $4 trillion, okay? Somewhere around there. I'm not going to double check it. It's somewhere around $4 trillion. In order to get similar types of growth, we're going to need to have like 7 trillion, $8 trillion, okay? Just to have a similar amount of growth, we're gonna have an $8 trillion market. And you can see the challenge. It's not too hard to get like, a couple $100 billion together. It is pretty hard to get a couple $1 trillion together. And then when you try to start multiplying that by multiple factors, it is very, very hard to get tens of trillions of dollars together and on the same page. What that suggests is it could take time. So when we suggest these time periods of how it could take 100 days, it could take a year in a bear market, it could take etc., etc., all this time, you have to understand we're talking about trying to get together $10 trillion, right? We're not trying to get together a couple cents, okay? It's not, oh, how come we're not at an all-time high yet? How come we're not just having another bull run? You guys have to understand, right? Pulling like $4 trillion, out of your butt in the middle of a global economic downturn is not easy, all right? There are major, major governments which cannot pull out, $1 trillion just whenever they want to. Okay, it just so to expect that some high risk, very questionable, highly criminal, Ponzi scheme based industry is going to get $10 trillion. That's just that's just not something that you should expect until things get cleaned up, until the garbage gets kicked out of the industry, right? And so that's what this bear market is about. It's about cleaning that all up. Now let's go ahead and take a look at, what these epochs may look like in, one-to-one on top of each other, right? So you can see we're just here, but there's something that you should also notice about this chart, which is that, first of all, this is just kind of an accumulation period, and then here's the bull run, right? And then we have then we have the bear market and its accumulation period, right? And so what we can see is that this is approximately the same amount of time, you know, uh, from where I've marked it off. Everyone can mark these off in different ways. Everyone can, it's just arbitrary where you start a bull market and where you start a bear market. I'm just picking this peak and I'm just picking this kind of like node before this major run. That's all. And so you can see that based upon my way of standardizing the divisions, um, I've the time period is very similar for the run up as for the kind of accumulation, right? The run down and accumulation. And so I can use that concept to make a projection. Here's kind of like the last node after, all of this turmoil. There's just kind of like this flat area and then kind of a bump. So, there's a lot of turmoil over here, and then there's this flat area, and then there's this notable bump, right? And so I would just suggest this is the analogy to this. It's approximately a similar distance from the blow off top, and this is my hypothetical blow off top, right? And so I think that this is a good way to standardize that measurement since we only have one, analogous period. And then we can also see that this would be a very similar type of run down from the market after that run up. And what would that look like? this was the run up, and then this is the major run down, right? And so just similarly, we have basically the same phenomenon. It's just smaller because I showed you, how there's diminishing returns, right? But effectively, we get approximately the same setup in both cases, and then we have a major drop. And here we had a major drop. I mean, this one was kind of, diagonal, and this one was also pretty diagonal. If we were to zoom in, you could see that it's just pretty much an extension of this one. But there was a bounce before that, and when we did have a bounce, remember everyone got faked out. We thought we were going to go to the moon in March, or was it April, right? And then we just had the drop, right? And so that's basically why I separate that, because you get this run down and then you have kind of a fake out. You have a run down and then you have kind of a fake out and then you have that drop. Then you have that drop. And then what happens? You have sideways action, right? During that period. Here you're going to have sideways action during that period. And I would just suggest if we use this standard for this timeline, the way that we use this, the way that this standard kind of was very similar to this timeline, and here I can show you the dates for that, right? 490 days, and then this was 430 days. This is 460 days, so less than this one. And so I also made this time period a little bit less, so 420 days, right? And yep, I guess that's a good number for a bunch of you. But just looking at it, we could suggest that it would also break down where the third, era of this kind of accumulation, right, rundown and accumulation, would be smaller than the middle one. And so I made this area just smaller than this one, just a little projection. This could be wrong. It could be sooner. It could not. It could be later. But I put it approximately on the quarter because business tends to operate on business quarters. And so starting that in November makes sense because that would be the beginning of a new business quarter. And also, likewise, it's probably not a coincidence that this one bottomed out in early April because the end of March was the end of the first quarter, right? So you see how these things can also have kind of a quarterly aspect to them on yearly calendars. The more that professional businesses and institutions come into the market, they operate on quarterly planning, right? Which is also why we can see quarterly backfills on this price action. But what would that suggest for the third epoch if we're going to go sideways after having this drop and then going sideways for a significant amount of time? Well, unfortunately, it would suggest another drop, okay? So a significant drop, in fact. And so what could we expect is probably a significant drop, maybe to 18,000, who knows, something like this, right? Maybe to 14,000. Or, it could be smaller than we think. Maybe it is just 25,000 is the bottom. Who knows? But the point is that we should expect that whatever price we end up on this second quarter, or pardon me, second period of this accumulation, that we actually end up going lower. And what is this period doing? It's killing off the rest of the alts, right? So this area was just about like slowing everything down, and then you check to see who's still alive, and then you see in this third one, uh, basically whoever makes it, like they're the survivors, and then they have the rite of passage to continue on in the market, right? Where would this suggest that potentially we could see the true like real bottom, like the accumulation bottom? Probably just if we just use this analogy, which could be totally incorrect, right? Because essentially we're making an entire fractal out of this one, epoch of Bitcoin. We could say that it's perhaps uh, January 2023, and I would suggest that's probably the earliest it could be. And again, I didn't, I just marked these things out. I didn't force these things to exist this way. And so again, you see it's on a quarterly system. And I didn't plan that. That just happened coincidentally. So we see a new business quarter starting, and then the potential for a pump. And then who knows, perhaps 3 months later, we could see a maximum price and then the quarterly backfill after that, right? But just going forward, we could see that using this model, eventually we will come to a point where we're probably going to have another run. And I would just suggest that probably the earliest you could consider is summer, just like in 2021, but basically, perhaps July, um, 2023 at the earliest, if not the next quarter, if not like, September or whatever. But the point is, like, that's getting a little bit too far to project, and I can only, consider what might be possible. It could also be just a double of this era. And if it is a double of this era, right, because see how this took like twice as long basically, that would actually put it over here, which would be March 2024. And I kind of didn't want to have that number out or that date out there just because it could seem kind of spooky to have to wait for March 2024. But hey, just in case I'm right, let's go ahead and just leave that on the charts. And in March 2024, let's come back and just see how we're doing, right? Now let's go ahead and put this thing here. But there is another thing that we can consider just while we're looking at this stuff, which is the heights. Like, can we get an indication of where we are in the market based upon the dominance of Bitcoin? Can Bitcoin dominance actually give us clues as to whether or not we're on the right track as we move through these kind of hypothetical dates? And I would suggest maybe yes. And the way that I would look at that is by using these trend lines that I have down here. Oops, wrong one. Let me go ahead and just get some of this stuff off of there. There we go. So we can see here that we actually have, these support and resistances basically, right? And you can see that they tend to lean on each other quite just like regular TA. And so there is something very interesting about this. And to try to get an idea about it, I put on these circles where I said, well, okay, here's the maximum height, here's the maximum bottom. It seems like, this circle is just doubling itself at the point of turnaround. And we can go ahead and put that wedge back on and see, okay, that's interesting. Like this circle that gets put in here, it ends up being the height of the wedge later on. That's interesting. Why is that interesting? Because we can make a projection based upon the current height of our dominance as to what it may be in the future when these things come together. And so what I did is I just took our, our little epochs and then our little arrows, and then I put the circle where I thought that it might align with. And look at this. Look at this. The height of this dominance, Bitcoin dominance, perfectly aligns with the height of our wedge at the point of the end of my third projection for this bear market to basically be over. And so, can I calculate when the hypothetical end of the bear market will occur? And yes, that's January 2023. And although we wouldn't necessarily have a bull run, you can see this basically just comes back to the same price, and this is really flat action. In fact, a lot of this is downward price action, after that run. At least we could say that you might want to buy your altcoins. You might want to get into your position somewhere in November to January. You might want to just be really planning along that time for your altcoins because we don't know what's going to be dying during the summer. But at this point, it looks like, just based upon history, that this duplicate circle of the original dominance circle prints on the center line of the end of that bear market, right? When you've reached a bottom. And same thing over here. This was the bottom of the bear market in 2015-ish. And you can see that was also the maximum point of this circle for that time period. So even though this is useless to think about, this era, it's just interesting that it's kind of printing the same principle, at least on this one line. And then what can we say? After this dotted line, after this third era, there was a lot of sideways action. This really wasn't that interesting. It was sideways. It had one run and then sideways again for a very, very long time, right? 483 days. In this case, it's basically sideways for 430 days. And so could we potentially see sideways, let's just say that there's a run, and that run tends to get you back to that second period of the decline. So let's say there's a run that brings us back to $30,000, and then maybe there's another, 330 days or whatever of sideways action before we get the real bull market, like the real bull market, not just the rally, but the real bull market. And so, you can see what this second era is. I mean, this second phase, like, I don't know what to call this phase, but basically after the bottom of the market, where it's just kind of like, I'll just call it the setup for the run, right? And so the setup for the run is something like this: a sudden increase of price to basically back to this, not the previous all-time high, but just kind of like tricking you to get back into this like secondary era. And then it quickly comes down. It's kind of like rewarding the people who were patient during the bear market. Like that's all. Like, this is just kind of like the reward for staying active during the bear market. And then you just have like a really long time of sideways action. And so we could probably see something very similar like this. Maybe we get that pump up to like 45,000 or something like this, right? Um, maybe even higher, maybe like 50,000, right? Who knows? I'm just hypothesizing. And then you come slamming back to basically the same price that you were at before the ultimate bear market, before you fell off the cliff, and you just go sideways. So maybe something like, $35,000, right? Maybe we just kind of hang out around 35,000 to 40,000 bucks after getting maybe, 35 to 50,000 bucks. And that this is what it would look like from potentially January 2023 all the way until potentially, you know, 2000, early 2024. So just a very boring market, maybe with one nice rally. Oh, and then we have to remember, there's likely to be a quarterly backfill to the lows. And that's going to be your last chance to buy in. And you can understand how market makers, etc., might use that to get anything that seems alive, like all these projects that seem alive, like to kind of like fake people out that we're going into another bear market. And then they just accumulate all the projects that survived the bear market, right? And that's their last chance to accumulate before we end up going on, of course, the next bull run, right? But in this case, the bull run might only lead us to $60,000 if we stay within this wedge. But if we break out of the wedge, then hey, the sky's the limit on Bitcoin at that point. If we break out of this wedge and there becomes like mass adoption globally of Bitcoin, then we could see a run that has never happened before in crypto. I'm not a salesman. I'm not going to try to sell you on that stuff. I'm just trying to deliver both sides in a reasonable manner. And so I hope you enjoyed this presentation. I thought about it completely on my own with no insight from anything, just thinking about first principles while staring at two charts that seem to have some type of interesting, inversely proportional correlation to it. And so that's my thoughts on Bitcoin dominance and the Bitcoin price action and where this market could go and how we could potentially derive a timeline so that you can have strategic planning in your crypto purchases and also understand potentially how you might consider, your own, um, financial practices in the future, as you consider um, the risk, right? The risk that's in the world right now. I'm obviously not giving financial advice. This is just for entertainment, but that was your alpha for the day. Stay safe and happy trading.